All right, all right, all right. It's about that time of day again here, folks. Back in the action once again. It's Monday evening. It's April the 1st, 2019. No tricking around, no fooling around tonight in this newsletter. Just the good stuff here for you guys and gals this evening. As always, my name is Joseph, and this, of course, is your nightly newsletter. Remember, I help new traders and experienced traders find predictable, dependable, profitable opportunities using a simple 3-step trading strategy that we teach and trade together every morning in our trade room. But my job tonight is a little bit different. My job tonight is to identify the best opportunities we see setting up for tomorrow. That's Tuesday's trading session. And we got oil, S&P, Nasdaq, gold, and euro on the docket for tonight's video newsletter. I'm going to jump in here first, though, over on the oil tonight because, of course, oil has a classic range-bound situation most likely developing into tomorrow's trading session. It's very, very obvious here on oil. We have a bullish market environment. When I have a bullish trending environment, I like to use channels and I like to use measured moves. I have my channel, of course, drawn above those highs. That's going to give me a great level of support. Keep your eyes on that support because you'll also notice 1, 2, 3 legs higher and right into that measured move. And it looks like we're starting to go into a range-bound market. Now, range-bound markets are very, very common after we see 3 big legs. We may see 4 legs, right? 3 to 4 legs, usually pretty typical. These aren't huge legs, but the bottom line though is all of this movement in one day's session tells me to look for a trading range right on this chart here for tomorrow. Now, if I can get that trading range and I can combine it right with that channel, I'm really liking these areas over here down in that battle zone to look for a buying opportunity down around that 61, 61.15 area. So I'm watching for a pullback and I get a handful of entry patterns I'll talk about here in a moment. I'm watching on that pullback. Now, if we do go higher here, again, we've got to be prepared for right that 4th leg. And of course, I'm going to put together that plan here as we go through the rest of tonight's video here as well. So if we get the pullback, wonderful. If we keep jumping up though, we'll put together that plan here in a moment here on the crude. So make sure you stay tuned if you're an oil trader over there. How about the S&P tonight? Boy, the S&P, we came in this morning, right? April 1st. We came in after the weekend. There was all kinds of headlines coming out of China about how their manufacturing indexes were spiking to new highs this year. And of course, it doesn't look like anybody disagreed with that. The buyers quickly got on. We saw a big bull move up. That big bull move up pulls back, new higher high. We mark up that high. We mark up that low, and that creates a spike in channel. This channel is a very, very important part of this clue here going to tomorrow. Not only does the channel tell us to buy the low of that channel, the problem now is you'll notice we've got this big overshoot of that channel. Anytime I see an overshoot of a channel like that, I always expect to see that pendulum swing back in the opposite direction. So we may see this market really tumble, but don't go trying to sell that thing. We're looking for that opportunity now to buy it going right back up. So I've definitely got my eyes on a big pullback here on the S&P. And of course, I'm going to look for a couple very specific entry patterns because as we pull back off that high, this is going to feel like a bear market. So I'm going to talk more about the entry patterns looking for if we do get the pullback. If we don't get that pullback though, a lot of times these spike and channel patterns, especially in these kind of revved up markets we're seeing this year, sometimes they break out into their own spike in channels. So if we don't pull back and we keep going higher, I'm going to talk about more of how I plan on trading that scenario here as we go as well. So make sure you stay tuned on that S&P. So overshoot is we're waiting for there on the E-mini. How about some Nasdaq? Now, Nasdaq is obviously bullish right now, right? Again, nice big strong push up, bit of a bull flag as the market pulled back today, and then of course up and over here. The bottom line is we know we're bullish, but where are we though, right? You'll notice 1 leg, 2 leg. We're sitting right on top of that measured move. We're sitting right on top of that big round number at 7,500. Not a great place to be buying, right? Probably not a good spot to be buying. So I'm looking for a pullback right now. I got a couple key levels of support. The trend line's the easy one, but look at that beautiful reversal line there around that 74.80 area. That's the sweet spot I'm looking for here on that pullback. And we'll talk more about some entry patterns I'm going to look for on that. But again, much like the S&P, who knows how far this thing will go. So if we do break out here into Asia, I am looking for a couple key patterns here overhead, and we'll break down those entry patterns that we can use here in just a moment here on the Nasdaq, because it may keep going here. We'll talk more about that here as we get into it. Over on the gold here, the yellow metal. Gold is completely the opposite of the E-minis and the oil. Gold, of course, is bearish. We got two legs down here on the gold. Gold is a classic example here of why you've always got to ask yourself, where am I right now? If I look left here on the chart, it's easy to see we're right back down to that big low from late in the month of March, right? That 29th, right, March low. So at the end of the month, right, the low of the month there, we're right there again. Not a great spot to be trying to sell, right, into that major level of support. And then to make it even more difficult, if we go even lower here now, we're at the prior month low, right? So February's low is right below us here. So there's not a lot of space. And that's a really big clue here on gold, because anytime I'm worried about selling into a level of support, I have a very specific set of patterns, and really overall, right, the strategy is a little bit different if I'm worried about selling into support. So before you go selling the yellow metal here tomorrow, make sure you stick around for the video tonight. I'm gonna dive into gold, and then who knows, right? This could reverse, and we might have a beautiful reversal on our hands here going higher. So we're going to break all those things down here in just a moment here of how you'll trade the long and short sides here on gold. And then wrapping up tonight here on the euro. The euro is range bound, right? Still range bound, still inside that range. There is a bear bias to it, right? There is overall a bearishness to this market, but make no mistake about this. It's a range market right now. Anytime we see a range-bound market, it's buy low, it's sell high. And really the big difference right now is we have this big momentum push lower. Because momentum is bearish, I have different patterns that I'll use to buy off the low, then I'll use to sell off the high. The plan is to buy low and sell high here for tomorrow. Stay out of the middle. I'm going to break down the exact patterns we're looking for on that euro in just a moment here. So we got all the markets ready to go here. Lots of news over the weekend, of course, right? In addition to all the great basketball games on television. Hopefully you guys had a chance to enjoy some of those this weekend. Boy, they are incredible. These kids are incredible, aren't they? But the bottom line is a lot of news out of China shook things up here in the overnight, and we want to get ready for possibly another big leg or maybe even a reversal for tomorrow. Before we jump into those charts, though, I want to make sure you never miss a video, though. Make sure you never miss a newsletter here. Every evening we put together our plan. That way I can teach you as much as I can, and we get ready for the following day in our trade room. To make sure you never miss a great newsletter video, just make sure you join our mailing list. All I need is your name and your email address, and then hit that subscribe now button. Now remember, when you hit the subscribe button, your job isn't over yet. You still need to register and then check your email inbox, because I'm going to send you a verification email. I'm also going to send you some welcome information so you can get the most out of our time together every evening on this video newsletter. So don't delay. Join that mailing list. You will not be disappointed. I promise never to spam or sell or rent the information. I'm always sending you only the good stuff into your inbox every evening, Monday through Friday. And then don't forget, tomorrow morning we'll be in our trade room, 8 o'clock Eastern time. I hope I get a chance to trade this strategy with you tomorrow. If you can't be with me each day in the trade room, the next best thing is to scroll down, and right below the video tonight here on the blog at sidewaysmarkets.com, I'll put all the links, by the way, in the description of the YouTube video, right? Hit those links in the description. Get over here to the blog at Sideways Markets, because right below the video tonight are all the charts that I'll be using for tomorrow's trading session. So if you can't can't be with me tomorrow morning, next best thing, of course, is to grab all those charts. And while you're down there, while you're below the video tonight, drop me a comment. Give me a question. How about some feedback? What do you love? What do you hate about this newsletter? What do you want to see me do more of or less of on this video newsletter, right? If you love my corny jokes, I'd love to know. If you want to see me speed up the process somehow, whatever you want changed, I want to know what you guys love and what you guys hate. What's your favorite market? What's your favorite strategy? Maybe you disagree with how I do my analysis on certain markets. I would love to hear from you in the comment section below. So hit me up in the comment section. And while you're down there, give me a thumbs up if you love this video every evening, if it adds value for your trading day. And don't forget, subscribe to our YouTube channel so you never miss another great video. And if you have any questions, don't forget, hit me up in the live support. We got toll-free phone. We got live support in the upper right-hand corner. Please don't be afraid to pick up that telephone. Call me in the office. I know. Most websites are all automated robots these days. I'm old school. I actually talk on my phone. Call the office. Let's talk about your trading. There's live support up there in the upper right-hand corner if the phone isn't your thing. All right, let's jump right in. Enough chit-chat here. Let's get this party rolling here. April 2nd is tomorrow. No foolery. No April Fools here tonight. Just the good stuff here from you guys. I was debating on whether or not I want to throw you guys a curveball here or not, but I know you probably got fooled enough already today, so I figured I'd go easy on you here tonight. Tomorrow's Tuesday, April the 2nd. Let's make sure ready, though, because we got a big week ahead of us here. We got tomorrow durable goods at 8:30. Wednesday, we got petroleum status report. We got jobless claims and ECB on Thursday. And then, oh, boy. Drum. Those are the drums. The drums in the background there, right? The employment number there at 8:30 Eastern time on Friday. Got a big week ahead of us. We got the Chinese-U.S. trade talks on Wednesday. Thursday, we got the ECB meeting minutes. Friday is the non-farm payrolls. I mean, pretty much tomorrow is kind of the least, potentially volatile day, right, of the week. Tomorrow, all we got is this lonely old durable goods orders. I'm kidding with you. That's a big news report tomorrow at 8:30 Eastern time. So, of course, we'll have a front row seat tomorrow morning at 8 o'clock Eastern time in our trade room. And then, of course, be watching closely to see how the markets respond at 8:30. And we'll look to trade that reaction. Don't forget, we open up every morning, 8:30 Eastern time, 8 o'clock Eastern time. We got news at 8:30 tomorrow. And, of course, we'll talk about Wednesday, Thursday, and Friday, right, as we go into the rest of the week. All right, let's jump right in. Got a lot to cover here tonight. Like I mentioned earlier, the headlines overnight, we came in this morning and everybody was responding bullishly to the overnight news from China. Manufacturing numbers are coming out nicely. And as you can see here, even as I'm recording this video right now, into the closing bell here at 5 o'clock Eastern time right now, they are still buying this market up here right now. So we are quite obviously here, right, a bull market. It looks like they're trying to get that not triple, but quadruple, right, measured move. So let's break this down. Anytime I look at a chart, the first thing I always ask is, what are my market conditions? Is this a range-bound market or is this a trending market? Because knowing the type of market I'm dealing with will tell me the right strategy. This is clearly a trending market. We've got higher highs. We have higher lows. The moving average is sloped. Every time the market gets below the moving average, the buyers are buying it right back up again. This is a bullish market. The market's bullish. Whenever it's bullish, I want to buy at support. So now my job is to find those support levels. One of my favorite support levels in a trending market is what I call a hidden channel. I'm taking the most obvious swings on that chart. I'm projecting it down to that low, and it's creating this, kind of quote unquote hidden level of support. When you use those hidden levels of support, oftentimes sellers will try to sell into them. They'll fail, and we can buy into their failure. failure. So I really like the idea of that hidden level of support. So that's one piece of the puzzle for a trending day. The second big piece of the puzzle for a trending day are what we call measured moves. I take that first leg, I copy and paste it. You can see they hit the measured move there, and then up from there, we pull back, and of course, right, measured moves. Now, right now, we're sitting right around that measured move. We don't have enough information yet to say that we're guaranteed to go up to that next measured move. It looks like they want to make that next measured move or happen, I should say. But it doesn't look like right now we've got that measured move in the bag, especially with this candle closing well off of its highs. So we know we're bullish, but we're looking at this measured move going. We're right around that measured move here right now. Probably not a good place to be buying into that level of resistance. So in a bull market, I want to buy at support. I don't really want to buy into resistance. So what are some options here? I've got to get us either going through this level of resistance, a little bit more proof, or hopefully we get that pull back so we can buy at some of these levels of support, right? I've got that channel. That channel becomes a great level of support. Look at this beautiful reversal line too, right? And don't forget, we teach all this stuff, right, in our video classes here at School of Trade. I call that a reversal line. That'll be a great level of support here, right, as well. So got a bunch of support levels here. We get a bunch of bullishness. I want to buy the pullback here. So how do we buy this market? What if it goes up? What if it goes down? What if it goes sideways? Let's go over some plans here for tomorrow of what I'm looking for to be a buyer here. First of all, let's say we pull back. I hope we do. Hopefully we do get that pullback. I've got my eye on the 61.15 area. And ultimately, if we can get that pullback to pull back here for us, I'm looking for a very simple two-pattern combination. The first one is get that deep pullback. Let's see those sellers try to sell off the moving average. If I can see those sellers selling off the moving average, well, now what I can do is I can look to buy into their stops. It's not a bear market, right? It's a bull market. And so sellers trying to sell that pullback, they're selling right into major support. I'm going to look to buy right into where their stops are. See, if I was a seller, my stop would be right above that high, right? So that's where I want to look for my entry to get long. I'm looking to buy right into those stops, and we call these a failure pattern, right? A two-try failure pattern. Now from there, I don't want to chase the market higher because remember, right, we don't want to buy into resistance, right? We got a bunch of resistance hanging out up top there. I don't want to buy into resistance. So instead what I'll do is I'm going to buy that pullback instead. That's why I said a beautiful combination here, right? It's a failure pattern into a pullback pattern. Again, get that market to pull back to the moving average. Look for the sellers, try to sell off of it. Once we got it, find their failure, buy into their stops, and we're buying the pullback, right, as we go. That's pretty easy, right? Pretty simple pattern. Now we know where we want to look for it. But what if we don't get the pullback, right? What if we just sit right here? What if this thing bounces lower, we pull back, and we start going sideways? Then what do I do? You know, it's very, very important to remember that, you know, when you go three legs up like this, a lot of times these markets will go sideways, right? You'll notice here, at the very least, we're three legs up, 1, 2, and 3. At the very least, we're 3. We might end up going 4 legs. So no matter what, 3 or 4 legs, I am looking for a trading range. So let's say, for example, let's get this zoomed in a little bit closer here right now. Let's just say, for example, we get a double top up here, right? Now, guys, this may happen up higher here too, right? It may we may go higher here in the Asian session, right? But again, if we do go up, we pull back, we go up, we pull back. If we start seeing this thing go sideways here, what's the plan now? I'm glad you asked. Take the size of that range, copy and paste that down, and that will create a key level of resistance. Think about it. It's literally the size of the range, copied and pasted down. That's a level of support now. So again, I don't have all the details yet, but once we have a range up here, once we see a range, and I'll teach you more in our classroom sessions, we find that support level. What's the pattern? It's called a two-try failure. It's a 1 up, a 2, and back up. Let those sellers try once. Make sure you get a clear second try. I'll go over more of the rules on that in our membership classes, right? And then, of course, we're buying into that failure. It's called a 1-2 try failure pattern. Okay, so that's the plan if we don't pull back and we go sideways. Now, what if the market goes higher here, right? What if we keep going higher here? What's the plan then? Well, let's get rid of this channel here for a moment. Let's make sure we know where our objective is. The objective is 62.23. That's the target if we go higher here. If we do go higher, I now want to look for this to be a spike in channel. Draw up that high, find that new channel, and we're buying off the low of that channel, right? Now, which of the patterns can I use on that channel? Well, think about it this way. If we were to zoom in on this, it'd be a failure, right? A failure into a pullback, just like we talked about down here, right? Let those sellers try to sell. We buy into their failure. We buy the pullback, right, as we go back up. The same basic, right? The same basic pattern. If we do get the pullback, right, we pull back, let those sellers try to sell it, right? We're buying into their failure, and then we're buying that pullback. This is the same basic sequence we'll use here now. If we go up, find that channel, and again, failure, you got it, failure, right, into pullback, and then up from there. But wait a second though, what if this market, what if it just starts to run here? What are some options up there now? Well, first of all, don't forget, anytime we get to a measured move, we almost always see a deep pullback and a retest of that high. So don't chase after it if the market just, overnight, if it just kind of slams higher here. What I always do is if I miss the opportunity or if I don't get a good setup getting into it, I'll just wait for the market to pull back again. I'll wait for those sellers to set up again, failure, right, into pullback and up from there. As you can see, I use the same basic patterns over and over again, depending on the current situation. I don't want to buy into resistance. I want to buy at support. So I find my channels. I use the channels to identify key levels of support. I know where my key levels of resistance are using these measured moves, and we plot the entries from there. Now, I want to teach you a lot more. I have so much I would love to share with you guys and gals every evening on this newsletter, but I got to keep going, right? I got to do the S&P, the E-minis, gold, and euro. Here's what I'll do, though. If you want to learn more about all my favorite patterns, if you want to get a much deeper dive into this entire trading strategy that we use every morning in our trade room, grab that free course. I'm going to put a link in the upper right-hand corner. I'll also dump a big red button below that video tonight. Grab the big red button, grab that link in the upper right-hand corner, grab your free course. That way you can learn more about my favorite patterns. You can learn more about what it means to be a client of mine. You'll see hundreds of examples of real patterns that we see every day in our trade room. You're going to love it. Everybody loves the free course, so grab the free course in the upper right-hand corner. In the meantime, though, let's keep moving because we got some more here to talk about here. How about some S&P? Boy, the S&P got on its horse today, didn't it? Boy, big gap up here from last Friday, right? That was the closing price on Friday, right? It gaps up. Again, news out of China. The economy is pushing to new highs. They get that big, right? That big, strong leg up. That big, strong leg up is almost always going to be your measured move. And, of course, that tells me now where that objective is. It's always important to know where's the market objective, where's the finish line, where's the mission accomplished. You've always got to think about that before you go trading anything. You got to understand the markets are always trying to achieve something. We have to figure out what that is. When a market is trending, it's almost always trying to achieve a measured move. Now, I know. Well, what about the 1618? What about the 1272? You're more than welcome to overcomplicate all of that. But time and time again, it's the one-to-one. AB equals CD. You're more than welcome to try to go out and find some exotic Fibonacci retracement. But if you want the most dependable levels of support and resistance in trending environments, get used to using that AB equals CD. right? And you're more than welcome to overcomplicate it if you want to. The bottom line is, after that gap up, we quickly now reach that measured move. The measured move is a major level of resistance. I don't want to buy up here, okay? I've got to either see proof, we want to go higher, right? I'm perfectly fine by that. I have no problem going higher here. I'll take my first leg, my second leg, right? My third leg. So we know where that next leg is. That's not difficult to find. But right now, though, we simply don't have the proof that we need. We just simply don't have the proof that we need to get through this area here. So what's the best thing to do? Buy at a support level, right? Don't buy at resistance, buy at support. This is where things could get a little bit interesting because, of course, with a bull trending environment, I find my bull channel. Now, what do you notice about this channel? Yeah, we overshot, right? We overshot. Now, see, sometimes the market will overshoot and keep going, right? Sometimes it will. Sometimes we'll overshoot and keep going. It's true. But a lot of times, though, the market overshoots and then corrects itself in the opposite direction. It's almost like if these candlesticks could talk, right? It's almost like the candles go, whoops, April Fools, let's do this again. Let's get back here and do it here instead. You know what I mean? We call these market mistakes in our trade room, right? Sometimes the market just seriously makes a mistake, right? It's like, oops, I drove too far. Oops, back it up a little bit and come back into that range. Now, this sets up for potentially a really big move down. So I want to buy at support. I don't want to buy at resistance. That's the bottom line. I've got a really great couple levels of support here. I've got my channel low. That's one level of support. What I really, really like, though, is this 28.61 and a quarter. This is the original high. That original high after an overnight move, we go up, back. I'll bet you have a lot of traders who are waiting to buy that 28.61 and a quarter. We call these reversal lines. And if you look at it closely here, the amount of the move above with the amount of the move below will put us right about that battle zone, right about that sweet spot here. So at this point, we're pretty much same type of situation as we had on oil. Get that off of here, get that off of here, right? Is this a range-bound market? Excuse me. Do we pull back and get a pullback? Do we go sideways at these highs, right? Or do we explode higher? Let's get ready for all three of these. As of right now, that trading range does not look very good here. So let's get that off of there. We're right at the measured move. We've overshot that channel. Now, if we get that big pendulum swing, right? I mark up the amount of the over. Mark up the amount of the over. Yup. Put that down at the under. Hold on. Get that off of there, right? Put that down at the under. Got it. Okay. So that gives me, from what we know right now, and keep in mind, right, this overshoot distance will get higher as we go, right? It'll get higher. It'll get higher, right? It'll get higher, it'll get higher, okay? So this will continue here. We'll get higher until we get there. Does that make sense? Okay, we'll talk more about this in our membership classes, and of course, we'll do it together with our clients tomorrow in the trade room. The bottom line, though, is the amount of that overshoot is oftentimes the amount of the overshoot in the opposite direction. So what does that mean for us? That means we might be in store for one hell of a pullback here. Now, whenever I have a really big, deep pullback, I always look for what we call a two-legged pullback, which would mean, right, it's a one leg, it's a two leg. I'm going to draw a trend line down overhead. And when I draw that trend line overhead, I'm going to look for the up and over to buy off of that low. Okay, so here's how it works. Because the market has to pull back so far to get there, it'll probably have two legs to it. Little bit different than the original pattern we talked about on the oil, right? I'm going to draw that trend line down. That trend line now is resistance, but I can use it as support. What do we call these? We call these two-legged pullbacks. right? For obvious reasons, there's two legs. 1, 2, up and over and go. Now remember, I cover all of these patterns in a lot more detail in that free course in the upper right-hand corner or below the video tonight, right, on our blog. So keep your eyes open for that deep, deep pullback. Now, at the same time, though, we may not get that deep pullback, right? We may end up going sideways up here. So what is the plan then if the market keeps going sideways here? I don't want to buy into the measured move. I want to buy where? I want to buy at support. What's the trick? The trick is measure the size of that range, copy and paste it down. That's going to give you a key level of support. Once we have that key level of support now I can look for, what was the pattern again? A 2-try failure, a 1, a 2, and back up. Let those bears try once. Do not try to buy off that first. Let them try a second. Once we see them try twice, now we know where their stops are, and we're buying right into those stops as we go higher here. Pretty easy plan, right? Pretty easy plan. Okay, from there, what if we go higher, right? What if we don't go sideways? What if we don't pull back, right? What if this thing just rips? Two patterns I would recommend you watch here, right, in the next few hours here. One is the 2-try breakout. Watch closely. Strong move up. Strong. Real strong. Right? Real strong. Then 1, 2, buy. These will happen very close to each other, right? 1, 2, buy. What will happen is the market will break up. You'll see a very shallow pullback, and you'll see sellers waiting right above that high, right there, right? They'll hit it again. Once you see those sellers hit it again right there, that's when you know everyone's stops are waiting right above those highs. Nice strong green candle, nice strong signal, and we're buying right into those stops. Those are usually pretty good for a nice, easy first target, 1-to-1 target, and then trail the stop. You know where your trailer goes, right? Your final runner up that 28.83. What is also very common is a 1, 2, 3 into a spike in channel. We talked about this on the oil. I mark up that high, I mark up that low. That creates the hidden channel, and we're buying off the low of that hidden channel. And again, if you want a deeper dive into all of our favorite entry patterns, check out that free trading course that I mentioned right after we talked about oil. Okay, so those are the basic plans, right? If we get it pulling back, if it's going sideways, right? Or if we get the blast going higher. Remember though, before you do anything, what's the goal, right? Where are they trying to go? What is mission accomplished? Remember, it's so important that you always know where is this market trying to go before you do anything. Right now, we have to assume we are where they're trying to go. And so you don't want to be trading now. That's like going to the airport and getting a first class ticket to the same airport, right? It would be like if I grab an Uber down to LAX and I go, give me a ticket to Los Angeles. I hear it's great this time of the year. The lady behind the counter would look like I was crazy, right? It is crazy to want to buy, right? I wouldn't go to LA to fly to LA, right? I wouldn't buy where the market's trying to go. I want to see we either get there, either show me proof or give me a pullback and we can buy on this. Let's keep going. How about some Nasdaq right now? So Nasdaq is in a very similar situation. The Nasdaq, though, might just be playing with their cards up right now. We may already know their hand on the Nasdaq. Now, first of all, there's no doubt about it. We're bullish. Strong move up, right? Big gap. I know, right? Chinese data comes out overnight. Everybody says the markets are hoo-ha in their way higher here. Big, strong bull move up, right? Pull back and a second leg. It's a trending environment. With a trending environment, what do? We use channels and we use measured moves. I've got my measured move. Remember, always want to know where is mission accomplished? Where's the goal line, right? Where is the market trying to go, right? We call it the market's objective. You've got to know where that is before you go doing anything. We are likely right at where that market wanted to go. right? We're already standing at the finish line. So now I have to see either proof we're going higher or get a pullback, because remember, usually when you reach a measured move, you'll usually see a deep pullback and do it again. Now, if we do go higher here, we know exactly where this market's trying to go. Put that next measured move on. That's the easy part. And of course, if we do pull back a little bit further here, right, if it did pull back further, I would adjust that measured move down. You're going to draw that measured move off the lowest part of its pullback. Deal? Okay? So we know where that measured move is, at least for now. We're bullish. I want to buy at support. I don't want to buy at resistance. So where can I find some support? Well, I know it's a trend, so I'm going to find my channel. This is exactly what I like to use, these hidden channels, right? I'm drawing off the highs. I find my resistance trend line first. Then I go slapping onto the bottom there. That gives me my support level. Okay, that support level also lines up beautifully with, you guessed it, this reversal line, right? Strong move up. That acts as resistance. That acts as resistance. I want to use it as support. I really like this whole area around that 74.83 area. So that's a good spot to keep your eyes on here for tomorrow. And then look, it looks like we already have the trading range. Moving sideways here, right? We go up. Sorry about that. Right? Move bullish into that trading range. Moving sideways. Now, what do we do with the range? We take the size of the range. We copy and paste it down, right? That creates key levels of support. Little tidbit on this one, this is a very narrow range. And because the range is narrow, I tend to use 2 range expansions. Where's that second range expansion? It's right there at that, we'll call that 74.80. Okay, don't worry about a couple of ticks there. We'll call that 74.80, 74.79.5, right? That's my key level of support. So, of course, that's a major level of support. So it's pretty easy to see if we don't go higher here, we've got this great spot picked out between that trend line and that reversal line and that channel and that range line. All we need now is the market to pull back here for us. Now, remind me again, what is the best entry pattern that I like to use when it comes to a range? If we go sideways, what's the entry pattern we like to use? The 2-try failure, right? 1 try, 2 try. Let those bears to sell it. Let them try again. Then we can buy as we go back up right into that range. Now remember, this could also, if we get a deep enough pullback, this could also go up, pull back, and give us a pullback pattern too. It's a 1-2 try failure pattern into a pullback pattern. Where's my high? My high is right back up. Pretty easy, right? Pretty easy. That's where objective is. I don't want to buy into the high, right? I want to buy away from the high. I always have to know, where is the market's objective? Where is the mission accomplished? Where's the finish line? We're at the finish line right now. Okay, now what if it keeps going sideways though? Right? What if it keeps sitting here going sideways? If we keep sitting here going sideways, not much changes. Just remember, right? If we have the low of this channel and we're sitting right there now, I'm not going to buy it if it gets too close. If the low of that channel gets too close, now we got to swap things out and start thinking about this trend line. 1, 2, and back up we go. 1 and 2, and back up we go. Very easy strategy. And again, we're going to break down the entire 3-step strategy in that free course I mentioned at the beginning of this class. Now, what if we go higher here? Big potential measured move up here, right? What were those 2 patterns I mentioned earlier? One was the break, the 1, the 2. Remember, right? Let those bears try to sell that second try, right? Let them try. Let them try once. Let them try twice, and then bingo. We're buying right into those stops. Because at that point, all the sellers are fully committed, and that's enough to give us fuel to keep that party rolling higher. What oftentimes happens, though, is we don't get that 1, 2. We get the 1, 2, 3. Now what do you do? You don't want to buy very high up there. You want to buy low, so you mark up that high, mark up that low, right? That hidden channel low, and then we're buying off the low of that channel using any of my 4 patterns: failures, pullbacks, traps, right? Whatever we get our hands on, right, as we go higher. And again, you can learn more of my favorite patterns, right, in that free trading course. So now we've got a pretty good idea. Just make sure you stay away from buying this higher right now on the Nasdaq, because again, right, you wouldn't go to LAX on the street here in Los Angeles and get a ticket to go to LA, right? You would go, right, somewhere else. You're trying to get to where that mission accomplished. Another example here on the gold tonight, right? Here's on gold, the yellow metal. What type of market is it? Is it a range-bound market? Is it a trending market? It's a trend, right? We kind of stumbled around beginning of the month here, down, up, back down again, but it's pretty easy to see though. There's no real range here. It's not much of a range on this. It might be. I'm going to talk about how this could be a range in a moment here right now. So if you think it's a range-bound market, I'm not totally disagree with you on that, but I don't see clear proof of today being a range. We'll talk more about that here in a moment though. The bottom line though is that even though we do have a trending market, I find my channel, there's my hidden channel waiting overhead, right? Like I mentioned, I always like to use those hidden channels. I've got my measured move. See, that's the problem. What's the big problem here? The problem is we are at the objective. We are at the mission accomplished. We're at the finish line, right? We're already spiking the football, for crying out loud, right? They're doing the end zone dance. They've got their mission accomplished. Now, it's not just the measured move, right? Look left. And what do you think? What do you see? Remember that big move down end of the month of March? No, it seems like forever ago, right? They go up and they retest the low. We are at mission accomplished. The bears have reached their objective. The hard part, honestly, is that even if we go lower, they have another low waiting down here. So it's not going to be easy for these bears to get away from this level of support, right? Whether it be the measured move, the prior week low, or even if we go lower, right, that prior month low, even if we go lower, right, that prior month low, that still isn't going to be easy. So the market's bearish. I want to be a seller, right? How do we sell this market? What do you think would be a good spot to be a seller? Again, I've got this trend line coming down. I'm looking for the market to get up around the top of that channel. So what do you think would be a good pattern here? Well, I'll bet if we can get a nice strong pullback, I'll bet we can get a bunch of buyers here trying to buy that pullback, right? I'll bet we can get a bunch of buyers here trying to buy that pullback and take it higher. Okay, and they might be successful. I'm going to talk about that in a moment here with you guys. But the bottom line though is if those buyers try to buy that pullback, now I know where their stops are. We're bearish. I want to sell high. I don't want to sell into support. We get up off of that support. The buyers try to take this market higher. Now what do? I sell into their stops. Where are stops? Stops are hanging out right below that low, right? All the buyers now will get stopped out once we make that run back down again. That's exactly where I'm trying to sell. Right? I want to be a seller in a bear market at resistance, but I want some sort of edge, right? We need some sort of edge over the opposite side of the market, and an easy way to get that edge is to look for selling opportunities where the buyers are getting stopped out. Exactly, right? When the buyers get stopped out, they become sellers. Now remember, we don't want to chase after it going lower because you're getting close to that objective, right? That finish line again. So wait for it, wait for it, wait for it. These almost always will pull back here for us, right? And give us those pullbacks. Okay, pretty easy there. That's if the market pulls back, right? Now, what if we go sideways down here? Right? What if we go sideways? What if we sit and we're seeing double tops, double bottoms? That's a bear bias to it, right? Because it's bearish, right? Bear market into that trading range. What do we do with ranges, guys? We project up. We find that level of resistance. Yes, find that level of resistance. Then what's the pattern? What's the pattern? The 1, the 2, the failure. Right? Very reliable failure pattern. You'll learn a whole lot more about those failures inside that free course that I mentioned earlier. Let those buyers here, let them try once, let them try twice, right? And we're selling back down to retest that low. Okay? Now, how do we go lower here? This is going to be the tricky part. Okay, so make sure you pay attention here right now. As we go lower here right now, that prior month low is the big target. It's also major support. So here are two scenarios I'm watching for. One scenario is a strong move down into a trap high. Strong move into a trap high before we get to 87.5. So imagine now, right? Imagine now we bounce, we run and go. Look for traps, right? Look for traps. Traps are my favorite go-to entry pattern when I don't have a lot of open space left to go below. Does that make sense? Right? Now, if we don't get that entry, if the market rolls over and runs lower, then what do? We have to wait. We wait for that pull back. We let those buyers now try, you got it. We let the buyers try to buy, right? And we sell into their failure. We don't just chase after it as it's going lower. Okay, that's what rookies do. And as of right now, you're 45 minutes into this newsletter. You are no longer a rookie, right? You are on your way. All you do now is apply this. Come trade it with me in the morning trading room, right? And we'll do it together. Okay, so that's the plan there on the gold if we go lower. One more thing though. One more thing here. I'd be lying to you if I said I wasn't keeping my eyes open right now on a reversal. Why do I say that? Because it looks like we may have a bit of a range right there, right? That was your low. They reject that low. They bounce off that low. Okay. Now, why is that important? Well, because what do we do at the low of a range? We buy at the low of a range, right? We buy low, we sell high, etc., etc. So what would be a good reliable way for me to be a buyer? The problem is it's not a bull market. It's a bear market. So what's the best pattern that I could use here to buy off of that low? Well, we talked about this last week in the video titled, right, Moving Average Secrets, right? Remember this from last week? If you missed that video, what I'll do is I'll link it up here in the upper right-hand corner. The video was titled Moving Average Secrets. And if you remember, right, anytime a market turns bullish, it's going to jump, right, off that moving average, right? It will have a very difficult time, right, staying below it. Okay? Now, knowing that, if we can get above this moving average with a nice strong move up, now that sets the table here. Okay, here's what I don't want to see. What I don't want to see is this. Right? Can't get away from it. That's not what I want to see to be a buyer. What I want to see is I want to see us go right through it. Once we go right through it, now look for this pattern. 1, 2, and go. Sellers will try twice, once and twice. Make sure you get those sellers at a higher high there. Okay, again, strong move up, clears right above the moving average. Like the moving average isn't even there. If it gets stuck at that moving average, you know something's wrong, right? You know something's wrong. Okay, if it gets stuck, you know something's wrong. If it blasts up, let them try once, let them try twice, we're buying into their failure. Where's my target? Big round number. Retest the high. Should be relatively easy if we get that original signal. But again, be very careful if it does this, if it sits, right? If it sits, that tells me we don't have the buyers in control, with sellers are very much still here, and that tells you you're going to probably want to see it up, failure, and back down. If we do go up strong, 1, 2, okay, now you can consider being a buyer on that. But it's got to really jump above that moving average. Right? The secret is in the moving average. As I mentioned earlier, I'll link that video up if you missed it, right, in the upper right-hand corner in the information icon. All right, we are looking good here on the gold. Now all we need is to get some more candlesticks here for the yellow metal. And then last but not least, over here on the euro may not get that much easier here this week, guys. I'm not going to lie to you. We got the ECB stuff coming later on this week. We got the just insanity of this Brexit back and forth right now. I'll tell you, if I was in Europe, this would be really getting old about now. I'm sure it is if you're tuning in right now, right, in really any part of Europe. I'm sure it's infecting everything right now. People are probably talking about this nonstop, I would imagine. We are in a range right now, I would assume, with the ECB meeting minutes coming on Thursday. I would assume with the, Brexit vote number, God knows what at this point, we may be seeing more of these range-bound markets. Now, what's the best way to trade a range? Buy low, sell high, and what's the pattern? The two-try failure pattern. But wait a second. Before we talk about that, though, what is our directional bias? We're bearish right now, right? And every time we go lower, we seem to have these big, strong bear moves. So what's the best way to use the two-try rule when I'm going against momentum? Because right now, momentum is bearish. And remember, I really don't want to go against the market's momentum unless I'm in a range-bound market, right? Never in a trending market. In a range-bound market, I can definitely go against momentum, but I have to be very careful. What's the best use of our pattern here? It's going to be a 1, a 2, and a go. The bottom line is that I would expect sellers to try once. I would expect them to try again at a higher price. And once they get that second try, then I'm looking for my signal and we're buying back up. So we go running down to the low. I would expect you're going to see sellers, they'll try to sell it once. They're probably not going to give up on it right after that first attempt. They'll probably try to sell it again. Once we see clear of 2 tries, now I want to be a buyer and I'm buying right back up into that trading range. Now, once we get to the top of that trading range, because the market's overall bearish, I'm going up 1. I'm letting those buyers try again. And much like we saw here, right? 1 try, 2 try, sell it back down. 1 try, 2 try, sell it back down. 1 try, 2 try, and sell it back down. Just remember, if this thing really starts ripping higher here right now, be very careful. Wait for that second try. Once you see those sellers have tried now twice, once the buyers try to buy that pullback, now we know where stops are and we're selling into those stops. And again, we'll go into a lot more detail on this inside the free course. And of course, we'll dig into this every morning, right, in our trade room. So bottom line, range-bound market, stay away from the middle. We want to buy low. I'm looking for that nested variation because, again, we're going against the market's momentum. We go up, let it go up, let it pull back, and then we'll sell into that 1, 2 failure going back down in. Now, I got to ask, what does it take for a breakout? I realize it seems a little bit insane to be thinking about a breakout right now, but what would a breakout look like? A breakout is the 1, 2, 3 breakout. Here's how it looks. Let's say, for example, we see a strong move down. We see a pullback to the moving average. This is 1. This is 2. I need 3. I need a strong move off the moving average now. For example, if we go into a range, this happens all the time. We go into a range, we see a nice big breakdown, right? What happens? People try to sell it. Price pulls back, sellers try to sell it. We, of course, know it's a range, so we buy into their failure. This pattern happens all day, every day on range-bound markets all across the world. But if they hold that pullback, right? If they bring it up and we get a nice strong blast off that low, 1, 2, 3, that's my 1, 2, 3 breakout, mark up that low, mark up that low, find the hidden channel, and then grab that entry right off that high. Okay, this takes some patience. It does. Patience is a muscle. You've got to use it or you lose it. Okay, this is one of the big things we work on every morning in our trade room. Right? You got to be patient during range-bound markets. You got to be patient with really anything when it comes to trading. Buying a pullback in a trend, fading a breakout, right, in a range-bound market. So we're trying to go back up into that trading range. And again, be careful here, right, on that euro this week, because again, got a lot going on this week. We do, right? Got a lot happening here in this first week of the fourth month of the year, right? No April Fools here for me today, but I hope you guys had a great day out there. Hope I'll see you tomorrow morning. Remember, 8 o'clock Eastern time, and we'll do it together in our trade room. Of course, if you can't be there tomorrow morning in our trade room, don't forget, I've got a great free trial here at School of Trade. Got a great free pass right there on the website homepage. That free trial will give you a free pass to come out and join our trade room. I'll also send you a copy of that free trading class that we can learn all the goodies we talk about every evening on this newsletter. Don't forget, check out those 3 levels of membership. We get a place for everybody here, whether you're brand new and you're good for the beginner, or you're an advanced trader, but you still haven't been able to put the pieces together. Remember, being a successful trader is a lot like opening up a combination lock. It's not just enough to have the digits. You have to have the sequence, right, of putting them all in line. And of course, we do that correctly every morning together in our trade room using that 3-step trading strategy. So don't delay. Get started. Come see me tomorrow morning in the trade room. Join the free trial. Learn more about our 3-step strategy. And as always, if you have any questions, comments, concerns, drop them in the comment section below. And I always look forward to seeing you guys same time, same place in tomorrow night's newsletter. I'll see you tomorrow morning. If not, same place, same time, same place tomorrow night. My name is Joseph. Be well out there. Be nice to each other, will you? There's no April Fools on April 2nd, okay? So get your fun out of the way here tonight, and we'll see you guys right first thing tomorrow morning or tomorrow night on our nightly newsletter. Be well out there, guys and gals. My name is Joseph. Be well. Be nice to each other, will you? And be here next time. Adios, amigos. Bye-bye for now.